Let's talk more about today's market action as President Trump is weighing in this morning, saying in a tweet, the Federal Reserve must finally lower the Fed rate to something comparable to their competitor central banks. Jay Powell and group are putting us at a decided economic physiological disadvantage. Physiological disadvantage, huh? Yeah. Should have never been this physiological.
That's what he said. That's not
also,
a typo.
Stimulate. I know. I kept thinking it was a typo.
I'm looking at the tweet right now.
With us now to discuss is Chris Konstantinos. He's RiverFront Investment Group Chief Investment Strategist. I apologize for my laughter. This is no time for laughing. I also want to bring in our panel for the next 90 minutes. Yahoo Finance's Rick Newman and Jared Blickery are here with us now. Chris, I want to turn it to you. I mean, the president wanted the Fed to cut rates before, so this is just, I guess, added fuel for that push. Do you think the Fed needs to cut rates again? Do you think they'll do so at the meeting next week?
I think they do need to cut rates, and I think they absolutely will. Historically, what's happened is that the Fed, usually when the Fed funds futures bakes in a really, really high probability of a rate cut or a rate hike, usually the Fed ends up not disappointing the futures market in that regard. I don't believe that the Federal Reserve is influenced in any way by comments from politicians, but I do think they are on heightened sensitivity here, given some of the volatility that we're seeing, some of the liquidity crunches. You know, obviously the Fed stepped in yesterday with an enormous $1 trillion+ aid for the repo market. So I think the Fed's on high alert, and I think they really should indeed cut rates. I think they need to try to stay ahead of this as much as they can.
Okay, so real quick, just want to update another cancellation. The Masters Golf Tournament has been postponed at this moment, obviously because of coronavirus. Back to the Fed. We saw what happened when they cut the 50 basis points. We also saw what happened, we're seeing it right now, with the backstop. You know, we're there for you to the tune of $1.5 trillion in the overnight markets. But what good is cutting next week, whether it's 50 basis points or if they take us as close to zero, the zero bound as they can get? What good does it do?
Well, I think there's a lot of sentiment out there in the markets that say, look, cutting rates, it's just pushing on a string. And in fact, with the European Central Bank, we actually saw yesterday that they did a host of QE and other measures, but they didn't cut rates because they're already so far below. So I think that there's real logic to the sentiment that you're pushing on a string by cutting rates. Remember, though, that central banks that's not their only tool, right? They have a whole other host of tools, including some pretty unconventional ones that they've chosen not to use yet. I hate to say helicopter money, but in a situation like this, it's incredibly uncertain. I would like to think that nothing's off the table. I'd also like to take this time to point out that this is really the time for policymakers to step up on the fiscal side. One of the really frustrating things, I think, in the United States is that we don't have a coordinated fiscal response from our politicians. That needs to have happened days ago, and it needs to happen really, really soon, because the longer that goes without the American public getting some sort of confidence that businesses are going to be supported, the jobs are going to be supported, the people are supported, then this crisis of confidence the market's experiencing can spiral down further.
Jared Blickery here. Goldman Sachs, JP Morgan, they're expecting the Fed to now cut by 100 basis points next Wednesday, bringing the effective target range down to 0 to 0.25%. But given the Fed is now extending their $60 billion per month purchase program to coupons, which is sounding more and more like QE, do you think that the Fed, at what point does the Fed go full blast and do another round of asset purchases in coupons?
I think it's time for them to start seriously considering that. If you look at what's going on in credit markets, you're seeing some very, very wacky things, and that should set off alarm bells for near-term liquidity. If you look at what, for instance, Germany, which I would argue Europe has been really, really behind the curve on a number of things over the last few years, which is regrettable. But you see the finance minister in Germany today saying basically unlimited financial support for our businesses. I think those are the kind of measures that we're going to have to take in this country.
Chris, thank you. Chris Konstantinos, RiverFront Investment Group Chief Investment Strategist. Appreciate it.